Welcome back, everyone. Welcome back to this week's sort of trade breakdown session that I'm going to do with you guys. I'm going to try go over price action over the last sort of month or so. I really think there's been some valuable trades, and there's been a lot of insight that we've kind of gathered from, say, the Fed. I think this has been something I've been putting off over the last couple months, just really trying to focus on doing our rebrand that myself and Alex Cottam have officially launched. So if you guys have not already seen that out, go check my link in the bio. We have officially launched our trading mentorship known as the Alchemy. That is how we are going to be running things. So myself and him will be doing things together, and you will now see all sort of mentorship as well as live trading sessions, webinars, monthly sessions and stuff like that is all going to be under the Alchemy going forward. So you might see the Atlia is not necessarily going to be around and shared on socials as much. So I'm super excited to announce that. That's going to be really something myself and AC are going to be working together with you guys. And I think there's a lot of content and stuff that we can dive into, and I'm really excited to kind of unpack how we trade within that Discord community, how our sort of traders go about things day to day. We've kind of launched almost over a year ago. It was a really good experience, really trying to understand how him and I both work together, but at the same time, try and upskill traders around us. And I think going forward, that's really what we want to do. We want to hone in creating a community. We want to bring more like-minded traders like us into the community and really see how we can develop on that in the future to come. So super exciting to announce that is officially live and that is officially running. We are actually doing our first intake from September onwards. So if you have not already done your application for this month, feel free to put through an application whenever you have some time. I think it's going to be really valuable for you, and we've got some really exciting things that we wanted to unpack in there, and look forward to the journey with a lot of the traders we have already been working with over the last couple sort of months or so. And I think that brings me to euro dollar, which is right in front of me right now, and I think this has been a super exciting pair to kind of watch over the last couple months. Price action has been relatively, I would say, stagnant to some degree. If you have a look here, this is kind of a bit of the analysis that I dive into with our traders on a monthly basis, and I think you can kind of also unpack a little bit more about what's kind of going on here. So if you have a look at, say, price action going back to May, early this year, we saw some really bullish moves out of these lower sort of areas around close to parity at around 1.02 in the end. And I think that was something that, if we have a look at DXY, was also very much in alignment with how we had been seeing things on the weekly time frame. So if you have a look over here, ignore my charts over here, you can see how price took out this sort of internal buy side liquidity sitting at around 107.3, and that was obviously coming into the end of last year, or during the middle to sort of end of last year. We saw these moves kind of rushing up into these areas as Trump was kind of bought into office, and I think after that you can already see how we had some really nice supply areas sitting up here. Price then came in for the first sort of tap at around 25th of November or so. We then saw this, I guess if you want to call it this, displacement holding over here, and then price continued to push higher into around 110, where we found some sort of top, and then price obviously started to roll over thereafter. So I think if we look on the monthly time frame, super clean price action. If you look at that, we had a lot of areas around, say, here. This was also a nice displacement that had been kind of holding over the last sort of 2 years or so, and I think everyone was kind of anticipating some sort of bigger move from euro dollar. We knew sort of in this time frame especially, Trump really likes to have a sort of weaker dollar, and we've definitely seen that. If we have a look here on the lower time frame now on the dollar index, I'm really keen to see if price is going to continue maybe pushing into these lower sort of demand areas sitting at around 95 or so. For the time being, we do seem to be really holding in these sort of areas of interest. So for example, if I just had to isolate this on the weekly time frame, you know, we've been kind of trading in and around, say, this 100 to 102 zone, where price has obviously been trying to kind of find some sort of basis. And if you have a look over here, we popped into this displacement, yeah, I guess mid this year already, and since then price has really tried to find some strength. But I think with upcoming rate cycle cut after Jackson Hole this last week, things are already starting to spice up. I really enjoy trading at this time of the year because you also get a bit more clarity, and I think the beginning of the year was quite tricky. We obviously had a lot of uncertainty, especially with Trump, coming in. I think a lot of the tariff talks through, sort of the traditional trading plays that we were quite used to in the years in the past. So it's been a slow but steady year, but at the same time you've really needed to be sort of patient and really grind it out. It hasn't been as simple as I'm going to throw this on and let's just see what happens. And I think that's something that's been a good sort of test of times, if you want to call it that, especially with the guys in the community, and even in my own trading, I've seen, we really have to sit on our hands and be patient. So I think hopefully going forward, once we get a bit more sort of decisions and decisiveness back into the market, I think it's definitely going to give us a little bit more clarity on where price action could be potentially pushing into, and what that could look like. Now, if we dive onto the daily time frame on the dollar index, you can have a look over here. This is something I was breaking down with the community earlier this week. But basically, if you have a look over here, we popped into this daily displacement at around 101. Price already had a nice reaction out of that, which if you have a look over here, I will draw up my sort of supply area like that. I'm not really going to play this on the bar replay. I just want to show you what I'm looking at. You can see how price broke through here, came in, and then continued to trade lower. I think everyone was looking at these lower areas at around 95 to really get some sort of clear guidance. But it looks like price has really been a bit more sort of indecisive over the last couple weeks or so, and I think we're really starting to see some sort of level of decision coming back into the market, which is quite interesting to see right now. So if we have a look at this, let's say we isolated this move over here to down here, you can see how we've just slowly chopped up, eventually coming into back and retesting into, say, this supply zone, holding at around 100 flat, if you want to call it that. And now we seem to be breaking down. I really want to see this low taken over here, and I also want to see this low taken over here if we are to continue, say, moving to the downside. And that would obviously mean that the dollar index would, a euro dollar would also be continuing to push a little bit higher. It might be the case that, if you have a look here, you can already see there's a nice BPR that we came and tested this week. It might be that we come and return into these areas. Maybe it's something that we completely, continue to move a little bit sideways and then eventually either continue moving down, or we might see price action really just chop around back in this area, maybe take this high and then do something like that. It's also very possible, to be honest. So this for now would be definitely my protected high. I am of the opinion that if we can hold, say, in these regions, so for example, if I just mark this out as my BPR, you can see how price came in here really nicely, actually tapped into that once. Now, if I break this down onto the H4, we are getting some sort of clarity, if you want to call it that. It's a bit messy, if I'm honest with you. If I look at this now, like isolating this candle is really tricky, but if I go back to the daily time frame, and I often do this if I really can't get a good grip of what's happening, from a price action perspective. I will just use this sort of wick as my area of interest. And if you have a look here, you can kind of see how we are holding in this point now. So for me, this would be my immediate low, which we have already tapped into. Now I really want to see some more sort of continuity like this, and then maybe something like that, right? Where this is now my run. So that's my internal run of liquidity there. This now becomes my new supply area, right? When it comes to high time frame, I trade through supply and demand areas. Just it's really easy to identify areas of interest, and I like using the style as getting an understanding of like what my level looks like at a high level, and then I'll break it down. So for example, even if I just take you one step back, right? Let's say for example, I'm looking at this on the daily, but I drop down to the 4 hour, right? Here would have been my supply area initially marked out, okay, which would have been on the 4 hour. We never really got there, but just to show you how I isolate my market structure shift, obviously in unison with a run of liquidity on the upside. But let's say for example we had this as our first confirmation break, right? This is our second confirmation break, okay? And let's say for example I just want to isolate this whole area because I think price might come back into this area a couple of times, which you've seen once, we've followed through twice now, we've got good reaction out of twice. I will then maybe flip back to a higher time frame, so something like this on the daily. Now you can see, okay, cool, this was where I ran my liquidity over here, or you can say we ran liquidity over here, same thing. And out of this bigger area of interest, I can redefine, say, clearer interest areas, or areas of interest that are more sort of, I guess, yeah, the word is refined in this case. So for example, if you have a look here, this would have been my BPR, and you can see how out of this higher time frame supply area, this was my BPR, which we then pushed into, and then prices continued out of there, right? So applying the same sort of approach, if you want to call it that, I would now be looking to apply this sort of area here. And I'm just going to mark this out with my POI. Okay, so for example, this is not really the best. I mean, we broke structure here, but it's not like a clear break like this, where you've got like some really decent pressure to the bottom side before turning around. So in this example, I would have just isolated this as my my area of interest. You can see we got the run, we then got the flip, and now price action has kind of come in and traded like 50% within this area over here, okay? And we got the reaction out of that there. So if you wanted to isolate this low and using this high, just use the fractals to help me, you would have seen price would have traded up poof, into the 50% region, and now we are looking to make that sort of, we're wanting to see some sort of pressure back down to the downside, right? So applying the same sort of principles now, I would like to see price action close down here, okay? So another bearish candle daily, maybe a couple of days down here. This would have been then my now new confirmed market shift. This would have been my run on liquidity over here. This would have been my new supply area. Okay, simple. And using this approach, you can now shift. So for example, this would have been my protected high over here initially. And as we get a new market shift, or with the accompanied run on liquidity, so this would be my run over here, you can now see that we can just shift our protected high, right? So for example, this will be my new protected high, okay? Now So for example, if price had gotten above here, I would have been a little bit wary of where we might go to from there. Might be the case that we just run liquidity and then continue like this, and then this would have obviously still been my original protected high, so I would have been happy with that. So what I want to see now is I want to see a clear break. I want to see price come back into here, and we look for more continued shorts back to the downside on the dollar index, which obviously correlates to, say, strength in the euro. But at the same time, it might be the case that with the interest rate cuts coming up in September, we might see price just really ponder around in this area, which is not ideal, but it's fine. But in this instance, this will now be my new protected high, okay, once we get that shift over here. And then I will want to see if price can continue trading into this bigger weekly demand area down at the bottom here, right? So that's just a quick overview on the dollar index, nothing too crazy. I'm going to go back to euro dollar quick. And if you have a look over here, it's kind of the same thing. We're just obviously looking at price action from an inverse angle. So if you had to map out how we were looking at these areas over here, and I marked this out with the community last year already, pre-Trump and all of his antiques that he gets up to, or he got up to this year. So yeah, if you guys are really interested in getting into the alchemy and I guess enhancing your trading abilities, this is exactly what I go through with the guys on a daily basis, on a weekly basis, on a monthly basis, giving you both high time frame clarity, but at the same time showing you lower time frame opportunity. Because in my opinion, if you're going to sit on the higher time frame and try to dictate where you think price action is going to go, it is basically impossible to catch intraday shorts, longs, whatever you want to call it, with some sort of mechanical edge that you can apply to high time frame bias. I completely agree that if you are now trading, say for example pro trend, yes, things obviously are a lot easier to trade if your entry model and entry criteria presents itself, but it's very difficult to couple high time frame sort of analysis and bias to, say, a 1 minute entry model, right? Or a 10-minute entry model, where you are trying to catch this low over here and this low over here, and so on and so forth. So if you get what I mean, right? Now I've got a set criteria that I trade, okay, when it comes to these areas. So for example, if you have a look over here, there are multiple opportunities within these sort of daily intraday moves that are happening to the downside from both a long and a short perspective, but I never tie myself to a bias because I look at how the intraday setup comes through on a daily basis, and I base how I'm going to trade like that. So if the high time frame is in alignment with that, that's great, but if it's not a deal breaker for me. And I think a lot of people think, oh, you have to have high time frame on your side to trade. Yeah, I don't agree with that. But anyways, you'll just find yourself in a discretionary bundle for the rest of your life, and you'll go around in circles not executing anything. So that's up to you, but at the same time, I think there's a lot more value to really understanding things on a macro level, understanding things on a high time frame basis. Yes, I completely agree. It's good to understand, are we counter, are we pro trend, for example, but at the same time, coupling that with some sort of discretionary trading strategy is not necessarily the answer, in my opinion. So what we try to do is isolate things on a mechanical basis, on a daily basis. We're not looking at what the high time frame is doing, but we are really isolating how the day-to-day price action will move within these areas, and obviously using the high time frame as some sort of guide from, say, a pro trend or counter trend. But it's not necessarily going to stop me from taking a trade, and that's the point I'm trying to make here, right? So for example, if you have a look over here, I can see multiple opportunities when we came into these areas actually, just by looking at these charts. And yes, for example, if you wanted to wait for a confirmed structure shift like this, right, which then gave you your new demand or your refined demand area over here, okay, and then you waited for price action to come back into this area and continue to move to the upside. Sure, 100%, there's nothing wrong with that. But if you were waiting for this move to come back down here, you would have got chopped 1, 2, 3, 4, 5 times potentially before you eventually got the move. So that's something that I try avoid, because I like to isolate how it looks on a daily basis, and then obviously depending on how we are moving in alignment and how the heartbeat of the market is, that's what I'm interested in. So for example, if we're super bullish like we were for the first bit of the year, right, anything in the contrary can be a bit more difficult to trade, but then you just alter your risk and you manage your risk. That's the whole idea around it, right? Anyways, that's enough rambling about that. But if we have a look over here, this is something I've been looking into, right? So this was my sort of new sort of level or demand area, if you want to call it that. Price came very close. We didn't tap into it and we started to push higher. In this instance, yes, this is still my protected high, because on the daily time frame we are still technically trading in a bearish sort of move to the downside over here, and until this high over here is broken, then sure, we are confirmed back on that the market is trading higher on euro dollar, right? So that's kind of what I was talking about with dollar index earlier, because that push to the upside over here is going to align with the dollar index push to the downside, where we've got those other areas sitting, right? And that's probably going to be sitting up here on the left hand side for euro dollar as well, right? But if we had to have a look here, I'm just going to maybe pull some of these areas over. So for example, this is my, if you want to call it, counter trend, high time frame supply area that I'm looking at. And for example, we could just be running this high over here, okay, and it might be the case that we then flip back bearish, break this low, and we continue to trade back down here. Maybe we take out this low over here, and then we use this demand area sitting here as our propulsion block to trade higher, right? That could be the case. But at the same time, I think at this current point in time, if we have a look here, I'm just going to flip to my H4. This is what it looks like a little bit more on a refined level for us. So if we have a look here, initially we had this pretty strong move to the downside that happened around, about a month ago in July. And I've been watching how price action has kind of been just chopping back into this area. Initially, we got some really nice shorts out of here, and I'll actually show you how you could have taken a short trade out of this area based on your higher time frame alignment, if you want to call it that. And then obviously at the same time looking at what potentially could be happening going forward. So we had this area over here which we tapped into once, I guess on the 11th of August or so, mid-month. We then pushed higher into this extreme supply area, if you want to call it that. We then got another confirmed shift, nice 4-hour move, and then price really rolled over. And this is kind of what we've been trading over this last week or so. And this has been quite nice, because if you had your short buys in alignment with this, for example, you would have been able to take advantage of this. But at the same time, I will also show you how you would have taken a short entry out of here, and if your buys were still long, because technically we are still bullish on the higher time frame until price action, potentially breaks lower. In this instance, this would be my protected low, and this would be my protected high. So for example, I've just got this marked out as my protected high because I was trying to tell the guys this is basically what we were looking at for some short continuation back to the downside. But then at the same time, and this is what I want to kind of break down with you today, we were looking at both shorts and longs because we don't have a higher time frame. We're not married to the higher time frame. And that's what I want to kind of go through with you guys today. So let's say, for example, that is the long that I will show you later. But anyways, this is the short I wanted to break down with you quickly. So if you have a look over here, what I'm going to have to do is just quickly flip on the H4 over here. Right. So this would have been my H4 area over here. Okay. Which is what I told you. Now, yes, everyone would have argued that we were trending higher and that we were bullish. Yes, I agree. No, I'm not saying that that is not the case. But what I'm saying to you today is that you didn't necessarily have to be mired to a long-only bias to only take long positions and completely eliminate the idea of a potential short entry. And that's what I want to break down with you, right? Because I want to show you these two areas now. Because price is not just going to continue going like this. Okay, we're not trading crypto. We're trading, good joke. Anyways, we're not trading crypto and we are trading euro dollar. So there is obviously a lot more sort of political macro things to take into account. Price does trade in a sort of rangy environment. That's great. That's great for how I trade. I like it when price ranges because when price gets boxed in, there's indecision. It's easier to capitalize on the moves because you're also keeping in the back of your mind that it's not going to be long only and it's not going to be short only. So for example, if you have a look over here, this would have been, I want to show you exactly how you could have taken these two trades, right? So in this instance, I'm just going to keep these areas out here for learning purposes, but this would have been, say, supply area 1, okay, and I don't have any supply areas marked out other than this one because initially there was a supply area here, but we're not looking that far back. I'm literally just wanting to show you if you were sitting on an extreme basis, a decisional basis, and an extreme basis again, right? So let's say that this is our last point of call supply area, okay? This is our last point of call demand area. So I'm going to call this demand area 2, or I'll call it 1, fine. And then this over here would have been demand area 2, okay? I'm showing you this purely how you can trade within a range environment without having the high time frame narrative behind you to say we're only going long only, if you get what I'm saying. So if I mark out this low, I mark out this high. Perfect. Now, if you get the sort of idea, right? Price trades into the supply area. So what are we thinking? Okay, cool. There's two things. Price is either going to react out of this area, it's going to trade back down here, or price is going to continue to trade up here and this break this protected high over here, and that would confirm our long bias. Am I right? Okay. So what can you do? There's two things you can do, right? You can either say to yourself, I'm not going to trade out of the supply area because I only want to wait for longs. But then the longs might never come because price just continues to trade higher, and then you've got to wait a couple of days or weeks or whatever it is to get your aligned bias, if you want to call it that. Or you could take a potential short entry here and then potentially look for longs back here and trade higher, right? So in this instance, I'm showing you a neutral way to look at the charts without being married to a particular bias, okay? And it's as simple as this. This is my high time frame area. This is what I'm interested to look at a potential short into, or look to potentially take a short entry from. And if I drop down onto the low time frame, you can have a look over here. In this example, we had this high time frame buy side liquidity sitting at around 1.6966. Okay, and we also had this sell side liquidity that kind of sparked the move from here to here. Okay, so in this instance we had mitigated this, in this instance we hadn't mitigated this. Now this is great because you can see here's my high time frame supply area, here is my high time frame buy side liquidity area sitting. So what am I looking for? Okay, I trade a simple AMD pattern. Most people trade this. I think it's really effective, it's really useful. All you're looking for is some sort of accumulation. So this would be my accumulation over here. I'll type it out for you, accumulation. Okay, then I want to see price manipulate into this area over here. Okay, and then I want to see price distribute to the other side. So I want to see the flip. And it's basically this simple 3-box pattern that I trade. So basically price will trade like this. Okay, and then I want to see price manipulate over here, and then I want to see price continue to distribute back to the downside. Okay, and this is super useful because if you have a look over here, this would be, what does that look like to you? And this would be, what does that look like to you? So I'm going to spark that question in your head, right? Price will move maybe above opening, okay, create the high of the day, and then start to distribute and potentially create the low of the day. And that was where we potentially get the trade entry and the model that I'm looking for. Okay, so I explain this a lot more in detail in Alchemy. I go through the potential scenarios in which you can trade this particular setup, how you can trade it, what you need to look for, how you can kind of break down applying risk to this on a systematic mechanical way. So it's the same thing every single day, it's the same process that you are following, it's day in and day out. This is what you're looking for, right? So I'm going to show you this because this is a really cool example. Now if you have a look over here, you can see we have this build up or this range that's sitting over here. Okay, and if I have a look, we start, well, this is still going into Asia. Now a lot of my Asia trading buddies, you guys know who you are, they love to just, you know, get in on the scalps, right? And there's nothing wrong with that, sure, but I think there's a lot missing when it comes to trading this particular style, because in the long run it doesn't necessarily play out in your favor. But anyways, we'll get onto that another day, and I'll show you how I unpack that in the sort of algorithm we built around this, and how you can use the style of trading and use it to your advantage. Because at the end of the day, you have to really understand data. Understanding data allows you to build a risk model around that edge, or understanding what your data is, it really helps you build the risk model. And essentially at the end of the day, it's the risk model that is your edge. But I will get into that on another day. And so what you're looking for is you're looking for something that you can trade day in and day out, that's really simple, really easy to use, super systematic, super mechanical, same thing every single day. You want to be able to apply the same principles every day. Sure, you might not get a setup every day, but if you get 1 or 2 setups in a week, allocating the right risk, perfect, no issues. Which might aggregate to say 8 to 10 trades in a month, fine. Some people say frequency is everything. I think frequency, depending on what type of frequency you're trading, is either really detrimental to you as well as your mental capacity. I've been there, I've done that. I've traded on the 1 minute, 30 seconds, 15 seconds. I've seen that movie you don't come out ready on the other side. So anyways, let's get back to this. This is my accumulation area over here. Now, keep in the back of your mind, right, we've got accumulation. I'm looking for the manipulation. So what does this look like to you? Yes, you would be correct, the manipulation. And now I am looking for price to distribute into the other side, okay? And we are in alignment with what? Our 4-hour supply. It's as simple as that. You're just going through the motions in your head. And this is kind of how I try upskill my traders. I really try to get them to think about these things and trade for themselves. And to be entirely honest with you, most of them actually don't even interact with us on a daily basis because they are so in tune with how they want to look at things themselves. So I'm building a community where you don't need me besides the initial starting point. I literally have seen every guy that has come into my community that has learned the way I trade and learned the way I look at the markets, comes in, builds it on their own, understands how they are using this trading concept of applying a mechanical systematic thing every single day, day in and day out. And on that, they are able to apply it themselves, and I never hear from them again. And what community can you say that happens in? Because I will tell you now for free that that is not happening anywhere else. And that is because we are trying to build self-sufficient traders that can look and understand the market on their own. I don't need to spoon feed them. I share trade ideas and I share high time frame bias for their own sort of food thought. But 9 times out of 10, most of my traders do not need me because they are able to trade on their own, and that is exactly what we are aiming to achieve. So if that is something that you're interested in, then you know where to find the link. It is in my bio on, I'm probably going to post this to YouTube, so it'll be there if you want to find me on socials. I'm the architect underscore TRD. That is where you will find me, okay? And if this kind of reigns with you, because I sat for many years trying to find something that works for me, and unfortunately it's very difficult to apply any sort of trading methodology or style that is out there unless you can mechanically commit and be disciplined to do the same thing every day. And that, in my opinion, is something that does not exist. So if you believe that you can be disciplined, apply a mechanical strategy day in and day out, then the alchemy is for you, because that is what I treat, that is what I aim to sort of teach, and that is what I teach my traders. Anyway, so we are on the M15 time frame now. That's enough blabbling, right? Here we've got, I think this is our previous day high at 1.16975. Cool, taken. But my main interest, or my main area of interest, would have been this one, right? So that level of 117. Sure, you can go get all fancy with, I'm going to use institutional levels, da 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 da. Cool, you can do that. Fine, if that helps you, by all means, go for it. We had Asia high also taken. Cool. So 1, 2, 3, 4 points. Perfect. I've got 4 potential reasons why price might be manipulating in this area, okay, and why I might potentially see a reaction out of here, okay. So we trade into London Open, price starts moving around, nothing too crazy, and then we see this sort of initial move down, which then creates the basis for, say, this low over here, okay. Price then continues to push back to the upside, so we then get this run of liquidity over here. You guys have probably seen this entry model on my story many times, or at least on my previous iterations of my YouTube content. And so now this is technically my protected low, so you can see how I'm just basically using the same principles, right? So this is my protected low, so technically if price breaks here, I'm looking for some sort of short reaction back down. And if maybe, for example, if we look over here, you can technically say that this is, say, your demand area. Price might just come in here and propulse from here back up. And I'm not interested in this trade if that's the case. But it might be the case that that doesn't happen. So for example, Let's just call this our shift zone. Let's get some ICT terms out here for the gents. Anyways, so now you have a look over here. Price starts to kind of move. Ooh, perfect. What do you know? We still do not have a valid entry model. Okay, because why? Now this price obviously just came in here and then started to trade high. But if you have a look now, this is my protected low here. Sure, but I was showing you this earlier, and that's why I think this is actually quite a cool, this is going to be quite a cool trading documentary. I hope you guys all like it. But this will be my new protected low, and this will be my new run on liquidity. Okay, sure, this will be my second break-in structure, if you want to call it that. Now what happens? Now things get interesting. Okay, because this is potentially another sort of demand area. Okay, and if price starts to hold in here and trade higher, then we just keep applying the same principles until the end of the day trading is done, right? So in this instance, I'm going to mark this out as my shift zone. Okay, just because I think it looks a bit better, but that would be my protected low. This would be my shift zone. Technically, these two areas here would be my shift zone. I use the bodies of the candles. Right, so if you have a look here, now what I want to show you is applying the same thought process again. Cool. This would be my whole area that I'm interested in. Okay. So for example, let's just make my POI. This is my POI. Here's my run on liquidity. This is my protected low. So if that breaks, I'm looking for a reversal. Okay. And if you have a look over here, there's so many things that you can add, but that's obviously depending on you, right? So for example, if you have a look over here, this would have been a displacement, but now if we break through it, which we are, this will be holding as what we call an IFVG, which is just simply an inversion. But anyways, sorry, I'm getting a bit carried away today with my ICT banter. But anyways, so let's have a look here. Price moves forward. Ooh, what do you know? Here is now my confirmed structure shift. This low is broken. We've got our shift zone over here. We've got our inversion level sitting here. There are many ways to potentially get in this entry. So for example, if you want to take an OTE, I normally use, say, the candles, again, the base. I hope you guys actually liked the session because I'm enjoying it for some reason. I don't know why. I think I've missed doing this and I will be back. So that's good to know. Depending on how you want to go for it, right? If you want to put an entry over here, you can do that and have your stop above here. If you want to, sorry, I'm not sure why that zoomed out, but anyways, if you want to put an entry on the shift zone, you can do that there. Okay, if you want to put an entry on the 62 level, you can do that. If you want to put an entry on the inversion, you can do that. It just already depends on what you like. So for me, I do like trying to get in as soon as possible. So in this instance, I actually think I had an entry on the shift zone. My stop was just above this high. So about a 16.5 pip stop loss. Okay. And if you have a look over here now, right, I am looking for price to now distribute. Okay, so I will try and maybe take price down to this level. I always look for the first initial sort of liquidity point, or I just try trade a fixed 2R. Okay, and if you have a look over here now, this would be in my, what do you know, my manipulation area. So what am I looking for? My distribution. So this completes, say, the AMD model that I like to apply. And if you have a look over here, I'll just play this out. Oh, it's actually quite nice. So out of the 1, 2, 3, and 4 potential entry model areas, technically the inversion would have been the best. So you would have got, and why do I mean it would have been the best? Because if you have a look over here, if you had your entry over here, for example, it would have been only, say, a 10 pip stop loss. So you can already see how your risk to reward almost doubles, okay? But in this instance, I'm just showing you what's the easiest way to potentially get in. I try to get in sooner rather than later. Sometimes price leaves me behind. So I'd rather be in the trade than not be in the trade, right? And then if you have a look here, you can see how price kind of trades back. We actually take this high, funny enough, okay? And then we get a 62 entry, and eventually we continue to trade lower. I think this rolls literally into the next day. Yeah. Voila. So in the end, depending on how you would have wanted to go about things, you could have taken an entry on the shift zone, which eventually I think I did in this instance. I got a risk to reward of 2.28 in the end. You could have had your entry on the 62 level and you would have got tagged in, right? Now that would have allowed you to get, say, a 5.2 risk reward. So it really all depends, but you have to keep this in the back of your mind. You do not know if this type of manipulation move is going to happen. It might, or it might not, but that is something you need to decide for yourself. So I think this is a great trade example, and I think I'm going to end this here because it's been quite a long session with you guys already. But that is a pure example of how you could have taken the setup with me in my community. I actually break down these setups with everyone throughout the day. I give you a sort of indication potentially in the morning what might be happening, or I might show you what is happening on the high time frame basis, and to some time or to some degree I also do actually show and share live sort of execution around what I'm doing. If this is something you're still trying to get to grips with, I try and take you through the process and hold your hand to really build your confidence, because I find when I can do that, it allows you to also get used to it really quickly, and when you get used to it really quickly, you can move on really quickly. So I think that's something that I really like to try help you guys out a bit more. I also try to show it a little bit more from a live perspective, so that you can really increase your learning curve, because at the end of the day, I want to get someone to, from say scratch or zero to funded within a really short period of time, and that for me is like the ultimate goal. So yeah, if you guys find this really useful and you find I know some people don't really like that live execution, and that's okay. If you want to just do your own thing, that's fine. Others really find it useful. So for example, this would have been a great example and showcase that we actually did do in our community, and I am happy to share some sort of screenshots and stuff with you guys just to give you some further clarification. But I think for today that kind of wraps up this session. I know it's been quite a long one. I hope you find a lot of value in this, and I'll definitely be here probably next week for another breakdown. So thanks guys, thanks for the support. I really appreciate every one of you. I know I've been a bit quiet on socials and stuff with regards to everything, but we are really working quite hard in the back end to get the revamp up and running, and I think we've got something that is going to be super useful for you guys as traders, and I think we would love to see you in the community. So have a good rest of the Sunday evening, and I'll catch you guys next week.